Well, I'm Arturo Préstamo, Chairman and CEO of Santacruz Silver Mining. We're a silver and zinc producer in Mexico and in Bolivia. Thanks for having me here.
Well, good to see you here.
Thank you, Matt.
Good to see you here.
Thank you, a pleasure.
Busy conference.
Very much so, yeah.
Lots of meetings, good meetings?
Very good meetings, yeah. All the full 3 days are completely booked. So we're happy for that.
No, it's interesting, isn't it? When you come to these, sometimes when you come to conferences, there's lots of people trying to sell you things, or the meetings aren't so good. But
happens.
This is good.
This is really good.
Yeah.
We have been having very good meetings with the right people, I will say it. So we're happy for that.
Right. Well, I think the setup in terms of what you've managed to do in the last 12 months allows you to probably attract a very good audience. So we're going to talk about the why and how you've done that now.
Absolutely.
Let's start with numbers. Because the balance sheet you've been tidying up, and I think you announced the other day
we reinforced our balance sheet. We have finished with the base payment from the Glencore assets acquisition. We paid gone. We paid the last $15 million last week.
Yep.
So we have amortized in advance those $40 million.
Beautiful.
At the same time, we're saving $40 million because we execute the acceleration program, the acceleration clause. Mm-hmm. So that's we're very happy for that.
Yeah, and obviously this year's been, the metal prices are fantastic, right?
No doubt, metal prices are helping. Our production is solid. We have a great team, both in Mexico and in Bolivia, which is we're delivering, so we're happy for that.
Yeah, so I think that my observation about you is that you were very determined to sort out the balance sheet. Obviously, remove Glencore and any issues that may have caused you, build up the cash reserves, and then sort of focus on, well, what do we do with this cash now? So should we look at the operations? We've got 3 producers, we've got ore collection, and we've got exploration to talk about. So how's it been in the last quarter? Any issues?
Well, actually, we have 4 producing mines and 1 ore sourcing company.
Okay.
So all combined, we produce north of 7 million ounces of pure silver on a yearly basis, plus lots of zinc credits as well.
Right. Okay. So, like I say, let's talk about some of the things that you focus in on with regards to the production. Obviously, I think water was a bit of an issue. We've got to work, but that's the kind of ebb and flow of mining.
Yeah. That's right. Actually, in our Bolivar mine, we experienced a flooding at 2 of our veins, the Pomabamba and Ane veins. Actually, the team managed it properly and immediately took action. So as we speak, Q4 should be back on track with those 2 veins. But it's important to mention, Matt, that and that's why San Lucas, the trading company, complements nicely to our business model. San Lucas came in and immediately provide ore to offset the lower production from that mine.
So you've got the ability to increase and reduce as you wish?
Correct.
Okay.
Well, in somehow, yes, because San Lucas can provide ore from third-party small miners that we used to buy ore from.
Okay.
So definitely that gives us a lot of flexibility and always assures us that we can have our milling facilities running at full capacity.
Okay, so I'm not going to measure too much on the production side. You proved that you can mine, and you proved you can mine economically within the normal terms of mining. What do you do with your money and the exploration opportunity? Can you talk to what you're looking for?
Absolutely, Matt. Actually, with today's metal prices and the production going as budget, we're building a strong cash treasury. Over the year, we have paid Glencore $40 million, where we amortize the full base purchase price. We also paid $27 million in taxes in Bolivia. And even though with these 2 concepts that I just mentioned, we are today with north of $55 million in our treasury, and we're starting to collect some value-added tax as well. So we have a strong treasury. That was our plan. That was our idea. And the balance sheet is clean. We have no streamings, no royalties. So
no other debt?
No other. Well, we just issued a promissory note in Bolivia, which was for us strategic as well.
Right.
It was a no-brainer situation where the implied interest rate is negative for us.
Right.
So it was important for us to do that.
How much was that?
We issue around, the full amount was 140 Bolivianos.
Right.
which is around $20 million.
Okay. Like say, negative interest.
That's right. And that's technically the only debt we have in our balance sheet.
So what's going on with the interest rates, the exchange rates between Bolivia
That's
and
a
US
good,
dollars?
very interesting question, Matt. Actually, Bolivia experienced devaluation recently, which definitely helps us in our cost. As you might recall in previous conversations, our total cost in Bolivia, 80% of our costs are in Bolivianos. So by experiencing this depreciation of the Boliviano, we need less dollars to keep running our operations. So that is definitely helping us with a all-in sustained cash cost.
Okay, and let's come to the kind of growth part of the previous question, which is exploration opportunity with this cash. Yes. What do you do?
Well, as you may recall, we have another asset, the Sakaya brownfield property. This project was explored and partially developed by Glencore back then. It has a PEA. Actually, we have a 42101 report on file. And this project, as we speak, we're going to start getting the full permit for this project. So in the next 7-10 months, we should get this fully permitted for production. Okay. And we're going to make a construction decision. Once that mine is in full production, that will give you another 4 million ounces of pure silver. Okay. So that's our, let's say, organic growth that we're going to be focusing on.
Pretty advanced organic growth.
Yes. It is.
So another kind of producing asset. In terms of like funding that, you know, how do you...
It'll be with our own cash flow. I mean, we're generating strong cash flows today. Our budget for this year is around $90 million free cash flow, $110 million EBITDA. So we can do it on our own cash flow.
Okay. And in terms of other kind of earlier stage, I'm talking, you know, either greenfield or brownfield exploration, what are you doing? In our portfolio, we don't have nothing like that so far, but definitely we keep our eyes open. We want to keep growing, and we're... But not by exploring. You want to do this by acquisition of existing brownfields? We're open to acquisitions as long as they are accretive to our investors. Right. And yes, we might. So where does the kind of the growth come from in terms of future? I mean, what's the sort of life of mine of existing operations, and how do you sort of extend those? Right. Well, life of mines, these are vein systems, no, underground vein systems. So technically, if you take the reserves that we have plus the resources, which the conversion ratio that we have is always above 1 time. You have around 12 years of mine life in Bolívar, for example, in Caballo Blanco. Porco is the narrowest vein system, so you have less, but it's always replenishing the resources that you are mining. No? Are you going deeper? Or, I mean, we're going deeper, and we're going along strike. I mean, these are very big veins, very big systems. Just remember, Porco is the longest producing mine in the Americas, 500 years non-stop. So if you were to be there, you see clearly the potential and the upside that these mines have. No, Bolívar, for example, you have 200 years of continuous operation, and it's clear that you have a very long, maybe a future for generations to come. No. So I had not picked up the 500 years worth before. But so in terms of the expansion plan, this is not a kind of expensive drill exploration camp and hoping for discovery. This is about just operating efficiently with the existing resources that you've got and to extend those reserve numbers. So that's cheap. That's our approach, Matt. And we're miners. We love what we do. We are at site every week, and our idea or strategy is to balance the resources, the inventories that we have, and what we need to have in place to be able to plan for the next 5 years at least. Right. And that's what we do. No? So if you want to inventory and build more resources by drilling, it's going to be very expensive on the narrow vein systems. Well, I guess that's what I'm hearing, and perhaps excuse me for not picking up previously. It feels like that the cost of growth and the allocation of capital is about getting immediate returns rather than sort of long, sort of delayed blue sky return profile that I've heard so much this week of. So okay, so I mean, how do you sort of talk to the market and say, right, I can put a value on that? Because like every good CEO, you should come and tell me you're undervalued, right? And but I need to be able to appreciate how then do I value the kind of current assets,
Right.
based on whether historic performance and your business plan about sort of the rate at which you chase these veins.
Right. Well, I guess one simple way to value it or value the company's or cash flow generation, right? Our EBITDA, as I was pointing out, is $120 million. Our enterprise value today is around 6-7 times that. So our peers are definitely on a higher range. So I'm not the one to say, but I think we have a room there to keep moving along.
So that
reevaluating.
That return on invested capital, which so many people like to lay out in front of me, you think that in terms of the value of the silver equivalent we'll go with in the ground for you is significantly more than perhaps some of the peers in South America?
Well, at least the same, no? I don't know if I got your
Well, I'm just going to say, like, if I look at a conventional business and their approach is, we've got a mine, we're going to do some expansion drilling and try and make another discovery, or to try and work out if we can increase the size of the resource reserve, etc. You're saying we've actually got it all laid out in front of us, and we're sort of attacking this from underground, following these veins. It feels like a less expensive process.
Oh, definitely. Well, sometimes in the narrow vein system, it's, I mean, you better do infield drilling as you keep developing and advancing towards your objectives.
Right.
Sometimes that it's even more economical than drilling for the next 5-10 years with diamond drilling from the outside. No, so it's also more accurate to go with development sometimes.
Right. Okay. And obviously, like silver price is doing a lot for everyone, as you said at the beginning. In terms of interest in silver companies like yours, it's there. There's lots of business development people here walking around. Are you having sort of inbound interest inquiries as well as looking out and sort of seeing what's available to you and how you spend your cash?
Well, we know the industry, Matt. We know what there's around. Definitely, we're keeping our eyes open for opportunities, not only organically. We know what we have, and we're walking the talk and developing our own assets. But definitely, since we're generating so much cash and building such a strong balance sheet, I think in addition to that, we have a very strong management team that we're prepared to review, to analyze, and to overtake another opportunity if we see one that is accretive for our investors. No, so we keep our eyes open, and yeah, we're definitely on the idea of that we need to keep growing.
So more of the same for the next 12 months.
More of the same.
Build up that cash reserve. Well, look, I appreciate you coming in. Great story.
Thank you so much.
A very simple story.
Very simple. We're very straightforward. Just build cash, build your company, clean your balance sheet, and keep moving.
Good. Thank you.